What would you do in the context of the China situation? By the way, throw in this wrinkle of Iran if you want this morning, because I think that there are going to be some people focused on that more than they have been, obviously, thus far.
Yeah, I think you're in that environment now where uncertainty is rising. Obviously, the tweet on Sunday hitting markets where we now have to think about the possibility of that 25% tariff step up and the risk of further escalation. And you're seeing equity markets price that in terms of sectors most hit by that tariff step up. Our work shows tech and industrials getting hit the most, and they were leading the market lower yesterday.
And so what are you doing about that?
Yeah, we still think there's a path forward to a positive trade outcome. Right. Obviously, risks of escalation are rising. We still like the tech sector given the growth backdrop.
Did you buy yesterday?
Given
I know people who were buying yesterday.
Yeah, I think a number of investors saw value opening up for the first time in a while, looking to put some money back to work. There have been investors on the sidelines, ready to buy, and this is an opportunity if you believe there's a path forward.
Jurrien Timmer, opportunity or bust?
Opportunity. You know, the sectors and the groups and styles that are in strong uptrends, when those take a hit, a correction, while the fundamentals still prevail, which of course is a big assumption here, then usually that's an opportunity to buy more. And certainly, as Keith pointed out, you know, tech, that whole growth space that has been producing tons of free cash flow, you know, unless we go into a recession, which I don't expect, and certainly not a recession based on escalating trade tension, I think whatever was working, I think will continue to work.
So, but just in terms of trading this situation, first of all, Jurrien, are you trading this situation at all? It
just happened. We tend to be long-term players in this market just because of the size of the assets that we manage. But obviously, when opportunities arise, we're going to take advantage of them.
Is there? So, do you think about Apple in the context of China, for example?
In terms of the risks and the...
In terms of the risk, yeah, sure.
Yeah, I think you're in an environment where the U.S.-China situation this is one likely negotiation over the next few years, and you see Apple shifting its business toward more services growth areas and away from the tech hardware that is, say, exposed to potential tariffs.
Right. Jurrien, you were about to jump in there.
No, I'm just saying, when you look at the last few days in the context of what's happened over the last few months, the PE has gone from 13.6 to 17.2 and now is 16.9. We need to just keep some perspective that the market has gone up a lot in a straight line. A 17 multiple really requires everything to go pretty smoothly because that is a manifestation of investor confidence in the earnings outlook, in the Fed, trade, global economy. And so, it's not shocking at all that obviously what's happening over the last few days is creating a little bit of an air pocket on the valuation side. But overall, when you look at the fundamentals, earnings season for Q1, it's now almost done, 88% of companies reporting. And everyone was looking for a 4% contraction in earnings growth, and that's actually now switched over to a very modest expansion. So even the narrative of an earnings recession is starting to not come true. And so the fundamentals overall remain pretty robust. Just yesterday, BBB credit spreads only went up, a few basis points. Financial conditions remain pretty accommodative, even though the VIX spiked up.
I'll tell you what worries me, and I know there's some irrationality to it. What worries me is that you and Keith, A, agree with each other, and B, just about everybody who's come on the air in the past 2 or 3 weeks seems to agree with you as well, and seems to suggest, yes, there won't be an earnings recession. The world is great, and they don't see any obstacles in front of them. Even with Iran and China, everything else, everybody says relatively, if rational minds operate, which people think they will, that we're relatively smooth sailing ahead. That's usually when the waters get choppy.
Yeah, well, so the bear case is that tariffs increase or this becomes a long drawn out affair, and that profit margins start to erode. And if profit margins start to erode, even in a rising earnings growth environment, free cash flow is going to grow at a lower rate than it otherwise would, and that's going to require lower multiples. So I think the risk is just that the valuation is wrong, that it shouldn't be 17 times forward PE, but maybe 15 or 16. And you can have that without really the world sort of turning upside down, but that just at the margin, things are going to be less good than they were. So I think that is a bear risk,
Okay.
and we'll see.